Welcome back to the Dividend Discovery YouTube channel and another episode of Dividend Stock Investigation. My name is Tom, and today we're going to be taking a look at a company from Pittsburgh, Pennsylvania, the consumer cyclical apparel retail company, American Eagle Outfitters. And before we move on to the criteria and eventually wind up on the proprietary stock picking scoreboard, I have to remind everybody I'm not an investment professional. This is for entertainment purposes only. And to be honest, I may not even know what I'm talking about, so enjoy. And as always, for a stock to make this series, it has to meet three criteria. It needs to be within 10% of its 52-week low. It needs to be less than $100, and it needs to have a yield north of 3%. In this case, we have American Eagle Outfitters currently within 3% of its 52-week low. The stock price is only $15.11 as of the time I am recording this, and our yield is a nice 4.77%. The first criteria I start with is the intrinsic value ratio. Based on projected cash flow, the current stock price is $14.24. Our actual current price would be overpriced at $15.11. So that has our intrinsic ratio north of 1, which I'm not a fan of. Next, I like to head over to TipRanks and look at their SMART score. They're giving American Eagle Outfitters a score of 10, which is perfect. And this is telling us they're predicting good things from American Eagle Outfitters in the future. Next, I like to check the value grade. For this, I go to Zacks. We're looking for a grade of an A. I would also consider stocks with a grade of a B. In this case, however, we don't have to worry about it because Zacks is giving American Eagle an A, which means in their estimation, this is a good time to buy the stock at a great value price. The next thing I look at are what I consider some of the key ratios. And again, this is just a brief overview. This is, am I going to get excited about this stock? Is it something I'm going to dive into further and do more research and see if I'd like to add it to my portfolio? Three of the key ratios that I look for are a PE under 10, if I can get it. In this case, we do. American Eagle is currently at 7.44. Next, I'm looking at earnings per share. Maybe not totally realistic for most companies, but hey, why not reach for the stars? I would love it to be above 5. In this case, American Eagle is not near that. They're at a 2.03, which nothing wrong with that, but it does not meet my criteria. And the last key ratio that I look at is debt to equity ratio. I like this to be under 1. In this case, it looks like American Eagle is a little heavy on debt, so their ratio is a 1.27. Of course, we have to take a look at the dividend history. I call this tab dividend data, or data, however you want to say it. AEO has paid a dividend since 2004. There's been a little fluctuation from the beginning. However, they've kind of stabilized over the last few years, and really beginning about 9 years ago, they've had a consistent payout. We've had no drop-offs. They had quite a few years of the same payout, which was 12.5 cents. In 2018, they raised that to 13.8 cents. Then in July 2021, they raised the dividend payment to 18 cents per share, which is where it currently stands. The next thing I like to do is take any potential company that I'm looking to invest in, and I need to see some data points versus the industry that they are in. I need to look at their competition. So in this case, we're looking at apparel retail. I like to look at two stats in particular, which is net margin and return on equity. There's all sorts of things you could compare here, but in terms of net margin, American Eagle is outperforming the industry 8.37% to 7.08%, and they are also outpacing in the return on equity as well. They are bringing in 34%, where the industry is just about 30%. And the final initial point that I look at is the analyst's upside. Again, this is a guessing game, but as I've said before, it's the best thing that we have to go on. Even though I am a dividend investor, I would like to see some potential growth in the stock price as well. I would like to see an upside of over 50% if I can get that. And in this case, with the current stock price being $15.11, analysts are saying within the next year we should see $27.27. If that does happen, we're looking at an upside of over 80%. All right, before we move on to the proprietary scoreboard and see how American Eagle checks out, I would ask you kindly, like the video, subscribe to the channel if you find any benefit to this, find this interesting in any way. I would greatly appreciate it. All right, so taking a look at the proprietary worth further investigation scoreboard. Let's see how American Eagle checks out here. Our intrinsic value ratio, we didn't do well there. We're getting the red X. Our smart score from Tip Ranks, our value grade from Zacks, checked out well. We get big green check marks there. PE under 10, we also scored well there. Earnings per share over 5, we didn't score well there. Debt to equity ratio under 1, we did not fit the bill there. Dividend increase for more than 10 years. Well, we're currently at 1 year, so we are quite a ways off there. Payout ratio under 40%. We got the green check mark. Net margin, return on equity, and then upside over 50%, all scored well. So with a score of 7 out of 11, the question is, would I look into American Eagle as a potential fit into my dividend portfolio? And I'm going to give this a yes. I'm on the border. It's teetering. I'm not real excited about 7 out of 11, but it does hit enough of the points where it is worth further investigation, in my opinion. Not saying that I would purchase it. Certainly not telling you to purchase it, but there you go. It's going to be a yes from me. What do you think? Do you own American Eagle Outfitters, or is it something you've been considering? I would love to know. Thank you for stopping by the channel. Thank you so much for watching this video. I greatly appreciate it. Take care, everybody.